Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. Over the last 5 days, Bitcoin has been consolidating between $83,000 and $86,000, just below that major high time frame daily downtrend spanning back since the beginning of 2025. Having retested this downtrend now for 5 consecutive days, the apexing point is coming very, very soon. Bitcoin is bound to make a definitive directional move through this trend line or below the 83k support, resulting in a correction back downward. In today's video, we are going to be going over the short-term charts, our expectations and targets, invalidations, and much more, as well as going over both the macro charts for Bitcoin, the 2-week and the weekly, and of course the total market cap. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can also join us down below on Telegram. This is the first link in the description. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in the VIP channel. To do that, click the pinned comment, click the admin link over here to contact our admin, or check out our 50+ month trading track record or a 10-minute video showing you inside the channel. You'll get access to 2 channels, the main VIP channel where we post trading setups with exact entries, targets, stop losses, and trade justification, including access to a variety of group chats from the general chat to the trading chart and education chat to the daily help, community setup, and news chat. Check it out, we'll see you in there, and let's jump into the content. So taking a look at Bitcoin, as we mentioned, for about 5 days now, Bitcoin has been consolidating sideways. We've just been bouncing between 83 and 86,000. Now, this short-term chart here, although it doesn't look significant, actually holds a massive degree of significance on the higher time frame, as the short-term breakdown or break upward from this horizontal consolidation will influence whether or not we see the breakout of this weekly downtrend or not. And of course, we're discussing the implications of that in the video today. Let's start on that market data, 24-hour volume and liquidations. Let's jump into it. Volume and liquidations, with volume up 17% at 224 billion. Liquidations up 54% at 297 million. 178 million coming from longs and 119 million coming from short positions. Moving over to the DXY, the DXY has broken down from that 100 level on the horizontal support over here, sitting at 99.9. Of course, this multi-year horizontal consolidation, we did see deviation toward the top side. Following deviation, we generally see the price action breaking that range low. In terms of macro expectations, we do expect the DXY to eventually move towards that 93 level over the course of maybe 1 year. This can take a long time to play out, and that may be exacerbated or changed based on future developments in regards to future interest rates and how the economic conditions do develop. At the moment, the chart is looking bearish, and we do expect continuations lower. Looking at the S&P 500, the S&P 500 is still looking quite bearish on the higher time frame. Of course, we did have a fantastic bounce last week following the 90-day tariff pause. However, that was just not enough to actually shift the trend upwards. We saw a good reversal, which took us up to retest a prior area of support, turning that area of support into a current area of resistance, of course, break of structure. And if we're looking at our structural formations, we've got our highs, our lower highs developing here. So until we break through one of those lower highs, it is unlikely the S&P 500 is going to continue upwards. At the moment, it does appear we have rallied into a point of resistance, and now we are seeing some degree of rejection. So at the moment, there are 2 scenarios. Number 1, we see consolidation and eventually a break through this lower high. If we see that, I would then expect the market to continue upwards aggressively. Number 2, we push back down into these lows around that 4,900, 4,800 level, where we either find a support which could facilitate a bounce, or if we lose these lows, we are going to see a steeper correction. So it is definitely not out of the woods yet for the S&P 500. The bounce was fantastic, but the bounce was as a consequence of a dramatic change in those tariff policies. And this has not seen, I guess, any substance to sustain in the price action as of right now. The uncertainty surrounding future economic situations, should I say interest rate decisions, is still very much there. There is still a large degree of uncertainty surrounding that, and until we get more clarity in regards to future economic conditions, and particularly future interest rate decisions, it's unlikely the market is going to move with any degree of confidence. And that is what we saw, these dramatic corrections anytime we saw, the sentiment shift bearish, followed by these dramatic rallies anytime we saw the sentiment shift bullish, because the market is uncertain, so it's eating up anything and is being significantly more reactive. So until we see a little bit more clarity, a little bit more certainty, it is unlikely we see that translate into the price action. Until then, we are still remaining cautious. Until then, we are not out of the woods. We need to see those highs break. That is it, guys. Let's jump over into Bitcoin. Like we've said, we are going to be taking a look at a lot today, going over the altcoin market, the total cryptocurrency market cap, the short-term charts in massive details, that's going to be the primary focus, and the implications of a break of the range low and the range high, and how that will impact the higher timeframes from the daily downtrend to the weekly targets and expectations, and just a general technical analysis. So before we get into all of that, guys, if you're interested in supporting the content and supporting yourself, you can use the links down below to sign up to BitGet, BitUnits, or BingX. You'll get a lifetime trading fee discount of 15%. That 15% discount can build up to 45% based on your trading volume, and of course you'll be trading on an exchange I trust. So support yourself and support the content, sign up, we'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnits with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnits being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnits very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get straight back into the video, taking a look at the total cryptocurrency market cap and the total altcoin market cap first. So as we mentioned with the S&P 500, I guess the main sentence we said was, we are not out of the woods yet. And I think that applies to both Bitcoin and the broader cryptocurrency market. We've seen a fantastic move toward the upside for both Bitcoin and of course for altcoins. However, that has not yet been enough. When we're looking at our trends and we're looking at our structural levels, we have not seen a break of that overall downtrend we have been in since essentially the beginning of 2025. And we have not yet seen prior higher lows being taken out. We have not seen a surge or a shift in the sentiment in the market in terms of our structural levels being broken. We have not seen that downtrend break. So although we have seen a good rally to retest this downtrend, it is very, very, I would say, wise to remain more cautious as we approach these critical levels of resistance. So when we're looking at these trend line, guys, as well, the total cryptocurrency market cap, we are sitting under that multi-month downtrend. The total altcoin market cap, we are sitting underneath that multi-month downtrend. This trend line is simply going to represent a level of which, if broken, the overall trend is assumed to have ended and a new trend may develop. Now, this doesn't guarantee a uptrend will develop which will sustain to new highs. It just facilitates the potential for a new trend to develop in favor of the current downtrend. So that opens up the potential for the buyers to step back in control and actually try to reverse the price action. Whether they will be able to do or not is a whole different question. and we need to assess how the momentum is developing as that trend line breaks. But the first step, of course, is to actually show a structural shift, which will be a break of this trend. If we are looking at levels to be confident in reversals, we are looking at the prior lower highs. So in instances of the total cryptocurrency market cap, we are looking at the $2.8 trillion level, this prior lower high level we need to clear. If we can break through this region, that is going to very likely lead to a strong reversal. The same goes to the altcoin market. Is going to be sitting at 480 billion. If we can clear 480 billion, it is highly likely we're going to see continuations up to 930 or even 980 billion. So those are the levels we need to break through for total market cap and total altcoin market cap. If we move over to the weekly chart for both of these charts, we can see the weekly charts are not looking amazing. We are currently sitting just underneath that 50 EMA over here, and we can see only once over the course of the last 2 years, since around October 2023, we temporarily dropped below that 50 EMA. The entire time since then, we've actually remained above the 50 EMA. So we're running into a situation here where the trend, the strength on the macro chart is beginning to shift bearish. It is beginning to become weak, which could facilitate stronger downward continuations over the macro if we are unable to actually sustain above those levels. The same goes for the altcoin market cap over here, with not only the 50 EMA being lost, but the potential for this horizontal level on the RSI to be lost as well. Now, if we do see the market continue downwards, our targets will be around 630 to 650 billion for the altcoin market cap, and for the total market cap, we are looking anywhere between 1.8 to 2 trillion as a potential reversal, simply that 200 EMA. So those are going to be worst case scenarios. Now, for all of those scenarios to play out, the worst case and the good case, a lot does rest on what Bitcoin does. Bitcoin holds the market share in terms of dominance in the market. Bitcoin is currently, and as we can see here on the daily, still sitting underneath the two most important levels. Important level number one being that of that overall high time frame downtrend. We can see we've been retesting it now for the last couple days. And point number two, at that $89,000 horizontal resistance. In fact, if we look at the 50 EMA, we can also see the 50 EMA on the daily is also providing a little bit of a resistance over here, lining up at that high wicks of that horizontal consolidation on the short term. So we actually have that daily 50 EMA running right through this horizontal level of resistance here on the short term, providing yet again another point of resistance. So we have a lot of resistance and a lot of confluence sitting right over here. And again, a break of that horizontal high will result in continuations into 89,000. And as we've said on the total market cap and the total altcoin market cap, just because we break through this trend line, that is not going to be enough to be confident that the price action is going to continue up into new highs, or even up to the $100,000 region. We need to see a structural shift. So the trend is the first step in a reversal. It facilitates and allows the buyers to have an attempt at pushing the price higher, but we need to see these prior areas of resistance, these prior areas of liquidity, our prior support, and now current resistance turn into an area of support. We need to clear this level, facilitate a support retest, and show demand above that region. If we cannot do that, it is a matter of time that this continued downtrend will resume and the price action will continue toward the downside. So a lot is resting on the next couple of days. Actually, I would say the lot is resting on the next 48 hours, because again, if we take a look at this horizontal low we have here on the short term around that $83,000 region, and we draw in that $83,000 region here on the short term, which is going to be this horizontal trend line, that actually apexes around the 19th to the 20th of April. So we're looking at around about 48 hours before we get either a breakdown of the short-term horizontal channel. Now this is within this time frame, so we're expecting a breakdown or a breakup before the 48-hour ends, okay? Either a breakdown or a break of the horizontal channel, which will result in either a continuation downward or a rally into 89,000. So I think a big move is coming here for Bitcoin in the short term, and a pretty important move, as a matter of fact, for the broader markets. Now, as we've said already, guys, a lot does rest on that short term, and let's talk about the short term now, then come back to the macro. So as we can see here, guys, we have been consolidating now for a couple days, pushing pretty much exactly sideways in about a 3 to 4% range between 83 and 86,000. Now, in our prior video, we discussed that Bitcoin was very likely to develop a horizontal consolidation. In fact, our prior video, we were around this region here for Bitcoin, I believe, and we said it was likely we were going to create some sort of horizontal consolidation between 83 and 86, and we have done just that. If we are taking a look at measured moves, we take the range high to the range low, we apply that to both the breakdown point and the break up point, and that is going to give us expected targets. Now, as we can see here, our projected targets for both the breakdown and break up is going to be 89,000, not a surprise whatsoever, okay, and 79,000, again, our prior level of support, not a surprise whatsoever. So the measured move gives us realistic and logical targets in both directions, depending on the direction it does break. Now, it is important to note that horizontal consolidations are neutral patterns. So there is no statistical advantage in a directional continuation. Either way, when we're looking at the short term, we have to contextualize the higher time frame. And at the moment, we know we have the 50 EMA here as a resistance. This is the high time frame resistance. So at the moment, the probabilities are not in favor of the directional continuation upwards. They are slightly more in favor of a continuation down. Now, when I say slightly, I don't mean it's like an 80% probability of a directional continuation down. I mean, there's just a slight probability favor of a directional continuation downward. When we are looking at the momentum, we can see here on the short term, we do have a uptrend here on the momentum, which may potentially break down. And if that does break down here in the 30 minutes, we could see the price action push back into this low, which may be the start of a breakdown and continuation into 79. So worst case scenario targets, Bitcoin breaks downwards from the horizontal support. Our levels of support we are watching are, of course, 81,000, 79,000 and 76,000. We are looking for break upwards. Our only target would be 89,000 if the price action does continue upwards. Let's now talk about the implications of these moves on the higher time frame, moving over to the weekly chart. So as we can see, guys, on the weekly chart, we are testing the 50 EMA. We also have tested the Gaussian channel upper band, which is now pushing into the $78,000 region. And also on the 2-week chart, we have got the Ichimoku cloud baseline level sitting at that $78,000 to $80,000 region. All of these important levels have massive macro implications of directional continuations. A loss of the 2-week baseline of the Ichimoku cloud, the loss of the 50 EMA on the weekly, and the loss of the Gaussian channel upper band on the weekly are all macro sell signals. When these levels are broken, they almost always suggest the price action is going to continue in a downward trajectory until we reach that weekly 200 EMA, which sits around 55,000. Now, for the price action to break through these levels, we need to see the loss of this low, and that is why this horizontal consolidation, although it's only been spanning now 5 days, has profound macro implications, because the directional continuation through this channel may be a leading sign of where the price action is going to go, whether it be 89,000 or potentially lower into this steeper downward correction. So these are the levels we are watching, guys. That is why the short term is important, and that is why I do believe it is a little bit too soon to be flipping perma bullish yet. We are sitting at resistance. Now, hopefully the price action continues upwards, right? Hopefully the price continues, but we do know policy stipulates demand. And we've had a lot of uncertainty lately around tariffs. We have a lot of potential looming news events that we are unaware of at the moment that may just pop out of nowhere. And of course, the interest rate decisions being that the main driver of risk asset prices, as it formulates the basis of perceived systematic risk. And we know that perceived systematic risk controls people's emotions, or is a representation of what people expect in the market in a future period. And the market being future seeing, it reacts now to what is expected later. So as we see that economic news develop, we may see the narratives in the market shift. And if the narrative starts to shift more bullish, the price action will be more likely to see these continuations upwards. But while this looming uncertainty around future interest rates is very much present, it is unwise to assume the market is going to randomly all of a sudden see a dramatic narrative shift toward the upside unless we have some immediate bullish policies developed or introduced by President Donald Trump or other parties. Now, taking a look, guys, at the macro chart yet again, as we mentioned, these are really the levels we're watching. To summarize the entire video in importance, we are watching the 50, we are watching the Gaussian channel upper band, and we are watching the baseline. These are the levels essentially that need to hold. Nothing else matters. If these levels are unable to hold a support, regardless of what happens, it is very, very likely we see a continuation toward the downside. So it's almost hold these levels or crash aggressively. Now, if we are able to hold these levels like we have been doing in the short term, and the price action is able to continue through these levels of resistance, well, then it is very likely we move from now not out of the woods yet into we are kind of all clear. But I don't see that yet. I don't want to blow smoke into people's faces. I don't want to, be dishonest with the charts of what I'm seeing. What I'm seeing in the market right now is we've seen a good rally. The rally's been perpetuated by the policies, of course, the 90-day tariff pause, which is fantastic. But from a technical and a structural perspective, we haven't seen bullishness yet. What we've seen is bearish triggers being defended, which is the first step towards a reversal. We've seen the price action rally to retest critical levels of resistance, which is another step towards a reversal, but a reversal itself hasn't really taken place yet. The way I see the price action right now is like that meme where we've seen a massive downward correction of 90% and then it goes up 5% and everyone's cheering again. That's kind of how I envision the price action right now. We've seen a little reversal after a cataclysmic correction for the market and everyone's getting ridiculously bullish again before we can actually give the market some time to absorb the news, to break through some structural levels and actually show true demand at these higher prices. So thank you for tuning in, guys. Again, short term, neutral, best to stay cautiously optimistic, have a plan for both directions. If we go up, fantastic. We know exactly what we're targeting and we know exactly where we're going. If we break down here, well, we know what's going to happen in the short term and we know the implications of those higher time frame levels breaking on the macro chart. So well-rounded analysis, prepared for everything, and of course, not expecting anything in particular, reacting, not predicting. Thanks for tuning in, guys. Have a fantastic day. See you in the next one tomorrow. Bye.